Hi, this is Steffi and welcome to another episode of the Financial Fox. Navigating the world of trading isn't just about numbers. It's about mastering the art of making the right exit choices. We have all been there. I've been too. Sweat up in emotion and watching opportunities slip through our fingers, wherever it's stock, shares, or digital assets. It's the same story all over. On today's episode, we are diving deep with a guest who's no stranger to the game. He's not just a trader, he's a self-proclaimed wizard of reading the market and also an angel investor. So stay tuned as we chat about keeping a steady head in the high-stress situations and achieving that peak performance, not just in trading, but in game of life. But before we get into the interview, I want to take a minute to talk about our sponsor, Greengage. Greengage provides e-money accounts for small and medium-sized enterprises, high net worth investors, and digital assets firms. They leverage the latest technologies, including blockchain, to unlock new funding and liquidity, a game-changing for many SMEs, which are fundamentally underserved by traditional financial services. As a client of Greengage, you will have a dedicated relationship manager, yes, a real person who will listen. And getting started with Greengage is easy. Trust me, I've gone through the process myself and it's been really simple and quick. So, if you are seeking a more personalized experience in managing your accounts in the digital space, I genuinely encourage you to check out Greengage. And here is a little bonus for you, my wonderful listeners. Use the code FOX10 when signing up to enjoy a 10% on the first year's fee on corporate accounts only. The link is in the description, so take a moment to explore what Greengage has to offer. Now, back to the show. Finally, if you're not subscribed to our YouTube channel, click the subscribe button now and follow us on social media to stay up to date with our news and interviews. Now, with great pleasure, I'm thrilled to introduce Anmol Singh, the founder of Live Traders and the author of the book, Prepping for Success. Hi Anmol, how are you?
I'm doing great. Looking forward to chatting with you.
Yeah, exciting. So, today the episode is about be or become a successful trader. Many people in my audience, they are traders, whether it's stock market or is crypto markets. And I think one of the challenges is always be when you should crystallize your gain or your losses, and if you can really live as a trader, is that something sustainable. And there is a lot of excitement about people, now the market is picking up, so I should be active. And, it's all kind of like sometimes people get taken by emotion too much. And that's really what I want to discuss today, because this is also a topic that you wrote a book about it and you are advocating for it. So I'm excited to dive into this conversation. But before we start, give us a short introduction.
Sure. My name is Anmol. I am founder of LiveTraders.com. I've been trading for about 13 years now, on my 14th year in the stock market. Started off originally trading for a prop firm in New York, where I was trading the company's money. In exchange, they used to take a percentage off the profit. So I did that for a few years. And then in 2015, when that company got bought out, I decided rather than joining that new company, I'm just going to start something off my own. And that's why we started Live Traders, as a way to, guide and teach other people the same way I learned, try to shorten the learning curve for them. So I've been doing that. I'm also an angel investor. I invest in startup companies. I have 32 different startup companies that I'm an investor in, and then also author of the book Prepping for Success. But trading is kind of my game that I'm known for.
Okay, brilliant. So let's start maybe with how do you choose your investment?
When it comes to stocks, I'm more technical trader, so I'm picking a lot of my stocks based on technical analysis. But that's when it comes to trading. So I have two different styles of trading, actually three. So one of them is day trading, which I'm doing every single day, in and out. That's what I call an income producing style. So you do that to generate income, to live off, pay your bills. And then I have swing trading, where I might hold the stock for a few weeks, a few months, sometimes a few days. That's more to take an account and to keep growing it. And then I have my investment account. So in my investment account, I rarely use technicals for entries, but what I do is I have a good list of companies, like a diversified portfolio, right? The basic stuff, Apple, Amazon, Microsoft, Google, Spiders, Qs, the NASDAQ. So I'm putting my money every month, 10% of everything that I make from my trading, from my day trading and swing trading. I take 10% of that and I automatically invest it every month. I don't even look at it. So that's the way I invest into the stock market while I'm doing the trading. And then I also take a percentage, I allocate it towards my unicorn fund. So I keep saving money, and then when I save up enough money, then I look for startup companies. I have a lot of investors and different people in my network that are looking to start their own companies. I invest in those. I had a couple that went public, so that's great. And just been focusing on that. So that's my investment style, 4 different buckets, but they all feed into each other. My day trading profits will feed into my investment portfolio, and then my investment gains will feed into me investing on my startup company's portfolio. So they all kind of go together.
So when you are trading for stocks, for example, what are the criteria that gets you to the decision to invest in a stock? Is like really looking at the chart, for example, or what are kind of the fundamentals?
Sure. So fundamentally, I only ask myself 2 questions. So I learned this a few years ago. I had I had lunch with one of the biggest venture capital firms, Sequoia Capital. So I had one of their fund managers, had lunch with him, and I asked him, how do you decide your investments? What makes you, choose what's a good company to invest in or not? And he said these 2 questions, and I've been using those to make my investment decisions. So first question was, is the company going to be more relevant or less relevant in the next 5 years, right? If the answer is yes, then I check that box. Then I ask myself the question, are more people going to be using this company or less people going to be using this company in the next 5 years? Then once I have the answers to those 2 questions as a yes, then I go to my chart to find the right time to get in. Because you could pick the best company, you can pick the best stock, but if you buy it at the wrong price, you could still lose money on it, right? So you need to learn how to buy it right. I mean, how many people bought Zoom, Roku, all these great companies, but they bought them at the highs of COVID. Now, even if they're great companies, you're going to lose money on the investment based on where you bought. So first I run them through the fundamental filter, which is those 2 questions. Once I get those answers to those questions, then I open up a chart and I try to find the right levels to buy them at, which is basically on a weekly or a monthly time frame, could be the 50-period moving average, right? Trying to buy it on a pullback rather than on the way up. So those are a couple basic stuff that I use for investment decisions. And then for trading, obviously there's a lot more that goes on. Trading is only technicals. I just look at the chart and we have certain strategies and patterns that we're looking for. So one day set up, we're executing the trade.
So when you're looking at where the market is, for example, right, we have gone through a market that was quite depressed, and now it seems like it's picking up again. How important are those macros for you to allocate more or less of your investment?
Yeah, so markets are always going to be cyclical, right? They always move in cycles. So for me, I don't try to time the cycle based on fundamentals or where the economy is. That's not my expertise, right? So what I do is only based on technicals. We have a certain patterns that always set up, whereas we call it a stage 1, where the stock is just going sideways, right? And then we get a breakout. Then the stock enters stage 2, where it's going straight up. And then almost always you get a bell curve and the stock comes right back down into a stage 4 downtrend. So what we're trying to do is we're trying to buy it on a stage 1 or a stage 2, not on a stage 3 or a stage 4 decline. It's much easier if I was showing you a chart, but that's how majority of these things always set up. So it's basically timing those right stages. But just imagine like a bell curve like this, right? So we're trying to time it either here or somewhere in the uptrend rather than buying on the top or on the bottom. And using charts and technicals with a pretty decent accuracy, you can predict. Now you're not going to be right all the time, but with a pretty decent accuracy, you're able to time the market cycles correctly. So that's what we're looking to do. October of last year was a great example of where we could have bought stocks on the way down, and now they've made that comeback, and now we're looking to get out again. So that's the whole cycles that we're trying to time.
Okay, so you will say there are some months that usually are, let's say, months where you don't invest. Like, what about August or September? Is there some kind of trends around certain period of the years where you should kind of keep an eye on, getting out, because usually everybody gets out? I mean, in gold market, there are some kind of these trends during the year.
Yeah, in stocks, I haven't noticed like a specific month that has a trend. But what we try to do is we always want to filter it with the lens of a chart. So you look at the chart, see where we're at. So if we're typically December and January, the only 2 months that I've seen good correlation, if you're seeing something selling off into December, then you're typically going to get that Santa Claus rally, a January effect, where the stock's starting to move up. So that's usually a pretty good time to buy stocks before December when they're going down, so that when December comes, they start to ramp back up again. New capital starts getting allocated to position themselves for the next year. So those are typically good times to buy. But again, you still have to look at the chart. If you're running up into December, then it's not a good idea to buy. It's not going to keep going up. It's going to get a reversal. So those are some of the things to look at. So not a specific month. We all base it just on the chart. We'll open up the chart, see where we are on the overall cycle. Because market stages always repeat themselves. It's always only 4 stages, right? And stocks can only do 3 things. They could either go up, they could either go down, they could either go sideways. So we need to figure out where in that cycle we are and then position ourselves accordingly. But the biggest thing is learning how to take profits. This is what a lot of people completely miss. They keep holding on forever. And imagine, like, if you had Zoom, Kathy Wood Ark, Roku, even Tesla, all these big stocks that had a massive run up but you never sold. Now, even though they've come back from, let's say, last year, you still might be down, or you still might have not had the profit that you wanted. So learning how to time those cycles, and you're not going to time it 100%, but even if you time it correctly enough that you get out near the top, then you could always buy them back. And that's what a trader does, is we're looking to, sell the top of the cycles, buy them on the way back down.
Okay, I want to talk more about this because I think it's a problem, and I saw many people, I fall into that myself as well, where, you get attached, you get emotional about a stock that you really think is going to be, it's still going to go up, and then it doesn't, and then, it stay kind of like the same, and then it's going to start to go down. Is that because people don't want to, why they don't want to sell? Why they just hold on and just keep stick with or get taken by those emotions?
Yeah, great question. So I think there's 2 primary reasons for that. Number one is people don't have a plan. Like, for example, the best analogy I can give you, let's say you open a store. You have this nice store, you're selling whatever you're selling, right? You're selling bath products, you're selling candles, whatever. So now if you run a store, you are going to have a price. I'm going to sell this item for this price, right? You're not going to say, well, let me see what the customer wants to give. Or you're going to say, well, maybe inflation's coming, the candle prices are going to go up, I'm not going to sell it now. No, you're running a business, you have a sell price, you're going to sell it there. That's because you have a business plan, right? Same thing we need from trading and investment. We need a trading and investing plan. So we need to know when we're going to get out of the stock before we get into it. A lot of people make the mistake, first they'll get into it, they'll see, let's see what happens. Let's see what happens is not a good strategy. Right? You need to predetermine when you're going to get out, because when you don't know when you're going to get out, when you don't have a plan, then the 2 primary emotions take place: fear and greed. There's only 2 emotions in the stock market: fear and greed. So now, in the absence of a exit plan, now greed takes over. Maybe it's going to go higher. Let me keep holding on. I read this article. This thing is going to go up, right? Let me keep holding. And then we keep holding, then it comes right back down. Then you feel bad about not taking your profit. So always predetermine your exits. That's the only way to do it. So sitting down, creating a trading plan, and saying, okay, if the stock runs up, 100%, then I'm going to sell some, take my original investment out, or something along those lines. So that's something that people would need to kind of sit with themselves and say, okay, what is my plan? But make sure you make that plan before you take that position, because when we take that position, our logical brain is off. Now our emotional brain takes control because we're invested in the stock, right? So we're not thinking clearly. So you want to think clearly before you get into it.
Another point is about portfolio diversification, and I think this is something that people they don't do all the time. Maybe because they don't appreciate the value of being exposure at different type of assets, and that gives you a balance rather than just put your eggs in one basket. What is your approach around diversification? How do you diversify your portfolio?
Yeah, so when it comes to investing, diversification is absolutely important, especially if you're not a professional trader or investor, right? Because a professional trader investor, we can have a little less diversification because we have statistical models based on charts that, okay, it's going to work X amount of time. So we can be a lot more concentrated, but as a rule of thumb, diversification is never a bad thing. So from my investment portfolio, I own a lot of different stocks, right? Microsoft, Amazon, Apple, Google, basically all the big cap stocks I own. But then I'll have some smaller ones like Uber, Shake Shack, DoorDash that are much smaller allocations in my portfolio as compared to the bigger ones like Tesla. So then, you have to make that decision. So I think everybody should diversify. Now, if you're somebody who has a job, you already have a business, maybe you're not a good stock picker, right? Then in that case, I would just recommend or suggest, not recommend, like do Qs or the spiders. Just buy the overall market. right? ETF. That way you're getting a diversification in just one thing, so you don't have to worry about every month buying 10, 20 different stocks. You could just buy the NASDAQ, you could buy the S&P 500, right? And dollar cost average every single month. That's for majority of the people, that's the right thing to do. Unless you're a professional, you know the cycles, you can time them correctly, then you can be in and out of your portfolio. But I think diversification is absolutely important, so you're not making the wrong emotional decisions by putting your money in a few stocks.
So we talk about different size of companies, right? Something that is, you can maybe something bigger, something a little bit smaller. Some people like penny stock as well, or small cap, let's call it like that. They've got, the 10x dream upside everybody wants. What about sectors?
Sector, same thing. I think when it comes to diversification, you don't want to be, like a lot of people make this mistake. Oh, I have, in my portfolio, I have Amazon, Microsoft, Google, Apple, I'm really diversified. No, you're not, because all your money is in the tech sector. So the tech sector goes down, are you really diversified? No, everything's going to go down, right? So either everything will go up or either everything will come down. So you need to have different sectors, right? So as I was giving you an example of my portfolio, there's going to be certain allocation on Tesla, Microsoft, Google, Amazon, Apple, but then there's going to be certain allocation on Pepsi, Coca-Cola, Johnson & Johnson, Procter & Gamble, right? Those safer stocks, the bigger companies like Kraft Heinz, things of that nature. So you need to be involved in a few different sectors. So if one sector is going down, it's not going to cause all of your portfolio to go down. And that's the biggest mistake newer traders make, is like just owning all technology stocks and thinking they're diversified, and then the NASDAQ goes down, they're wondering why their portfolio is down. So you need to have energy stocks, you need to have commodity stocks, gold, silver, you need to have some technology stocks. Now you can have more weighting on one sector that you really believe in, but you still should have a few different baskets so that, when the economy takes a downturn, when the inflation is high, guess what? Inflation is high. Well, McDonald's, all these stocks are actually going to do well because they're seeing a price increase, the revenue is going to go up. So that's how you protect against inflation and all those different things.
Okay. That's brilliant. Completely agree with you. Give us some insight on how you see the market going. So what you are perhaps more excited about, less excited about, and what you think perhaps could be an area, a sector that investors should keep an eye on.
I think what I'm looking at right now is, all the beaten down stocks from 2020, like those big hot flyers, right? The technology stocks like, Zoom, Teladoc, Roku, that were all, 90% down since COVID, but they're going to get a comeback. Now, they're not going to get a comeback. They're not going to go all the way back up to where they were, but they're going to get very healthy bounces. And we saw that recently, right? Coinbase went from $30 to, $100 something. We saw Kathy with ARK ETF recovering and going back up. So you're going to start to see these little small comebacks. As a trader, that's what I'm looking at. If I can buy something at $30, sell it for $60, that's 100% return. So I'm looking for those smaller bounce plays at the moment, those sectors that have been beaten down, even Peloton, Robinhood, all those stocks that completely got killed. They're going to see some short covering as shorts try to get out of their positions. And even, other recovery plays, which is right now it's a penny stock, but, there's a lot of different stocks like that. WeWork, all these companies that have just been killed, completely destroyed. Marijuana sector is another interesting one that has been going down for every month in a row for like several months, not seen a single green month. But if there's any little hint of news of legalization or things of that nature, those sectors are going to get those short squeezes. So that's just a watch list for me right now, just watching it. We'll see how it plays out.
What's your thoughts on gold?
I like commodities. I am more of a fan of silver than gold. But, I think that right now the dollar is in a position that's pretty strong. So because the dollar is strong, it's causing downward pressure on commodities like gold and silver, causing them to go down because they have inverse relationships. So we're going to have to see when dollar pivots. I think dollar is going to have one more run up and then kind of pause. And then that's the time to, position yourselves back into gold and silver. I'm focusing on silver at the moment because I feel that's much more of a bargain at these prices. But I do like the sector overall. I think it should be something that every portfolio has a small amount of allocation in, because that's your safe money. Now, you're not going to triple your money on gold or silver, but your money is going to stay and maintain its value. And that's what most people need to understand.
Yeah. Let's move to more like new technology discussion. So crypto, digital assets. And I want to start with your angel investment, because because what I would like to understand is you have invested in different kind of companies in the space. On the stock market, we discuss why you decide to invest in one company or the other. What are your investment criteria for blockchain company, for a crypto company, for a new technology business?
Yeah, so when it comes to angel investing or startup companies, the first thing I look at is the entrepreneur. Who's the person who started the company? What's his background? What's his experience? Who does he have in his network? Does he know people, right? Then I also look at who other billionaires or big firms are investing in it, right? So if I'm the only one investing in it, well, then the question is, why did all the other people pass on it, right? So I look at seeing which venture capital firms are also putting money. Is there any other billionaires putting in money? And then I look at the entrepreneur's track record. And I usually talk to the entrepreneurs. I always schedule a Zoom call. I said, hey, I run this organization for angel investments. I want to hop on a Zoom call and see. I talk to them and I try to get a feel for where their head's at. So if the entrepreneur is always talking about, yeah, we're going to do this, we're going to sell this company for X amount of multiple, I'm never going to invest. If his only goal is to sell the company, I'm never going to invest in it, right? Now, if an entrepreneur is more passionate talking about the industry, his company, his vision, then I am more likely to believe in that person, right? So those are the things I look at when it comes to startups. Now, when it comes to crypto or technologies like that, I'm looking at the team. I'm not looking at the hype or what people are talking about on Twitter or what people are talking about on Reddit. I'm looking at the team. Who runs these organizations, and are they ethical individuals that I can trust, right? Who's the team behind it? And I try to see academics, right? Are other, professors, what do they think about it? What do the university professors and academics think about this crypto technology? And that's what I use to make my decision. So I think, again, not to make any suggestions, but there's tons of cryptocurrencies that are out there that do a tremendous job, right? I only invested in one of them, but there's Bitcoin is one that I feel that was quite early on, but I don't think it's going to end well for Bitcoin and Ethereum. It's going to have one more run up, but I think that's going to be probably the final run up for these type of things, because if you have a technology that cannot power the global financial systems of the world, too expensive, too slow, right? Quantum computing is almost here, which is going to cause these hacks to take place in a few years from now. And Bitcoin is not quantum secure because it's decentralized, so that nobody can make any changes to the protocol. So when an attack happens, nobody can do anything about it. So I think that's why it's not going to end well for currencies like Bitcoin.
Wow, that's interesting. Interesting point of view. So before we get into that, how much percentage of your portfolio you allocate to crypto?
So as I said, I have investment in one cryptocurrency, and that's roughly a pretty decent size position. It's like 5% of my overall portfolio, which is pretty decent because it's only in one crypto. That's kind of what I'm looking at.
Can we reveal what crypto companies?
Yes, the token is called Algorand, ALGO. That's the only one that I've invested in. I've had numerous discussions with professors from Wharton Business School and different people who are involved in the creation of these technologies. And even the person who created Algorand, right, Silvio Micali, founder of cryptography, he invented all of these things. He's quoted in the Bitcoin white paper. He invented zero-knowledge proofs. So he won the Turing Award. So I think the team is trustworthy. They're not the crypto bros, the young people who are just hyping stuff up, causing them to pump. It's a very stable type of currency, and you get yield on it, right? 17%, 18% by staking them. So I think that's the reason why I chose that. But again, with any crypto, there's always risk. The way I think about cryptocurrency is like the early stages of internet. So when there was the dot-com bubble in the year 2000, everything went up. All the technology stocks went up thousands of percent. There was a company called rock.com that just sold rocks, right? But their stock shot up thousands of percentage in the year 2000. And then what happened? Dot-com bust happened. All those companies went to zero, but then a few winners emerged. Microsoft, Amazon, Google, Apple. Same thing will happen with cryptocurrencies. It's already happening. Majority of the cryptocurrencies ran up. They all went down 80-90%, right? Through this crypto winter, there's going to be a few winners that are going to emerge, the next few leaders. And I think it's Algorand, but again, everybody should use their own judgment. This is not financial advice.
Yeah, 100%. And I think you talk about cycle in the stock market. There are also cycle in the crypto market as well. We have seen, Bitcoin as the first one, but also Ethereum like moving in a cycle. And Bitcoin being the first one with the halving, you see kind of like a pattern every 4 years. Now, what I would like perhaps you to expand is why you think Algorand is going to be a winner amongst other currency like Bitcoin and Ethereum. And then secondly, what is the role that regulation is playing in the future of crypto?
Yeah, great question. So, when it comes to Algorand, so obviously at first I already mentioned the team.
Yeah.
Cryptographers around there, pretty much all professors of all universities are together creating this technology. And then number three, it solved the trilemma, right? So Ethereum's founder, Vitalik Buterin, he said that all cryptos cannot have all three, which is security, decentralization, and they cannot have all three of them, which is the trilemma. And Algorand solved that. It is decentralized, it is private, it is very secure. It's had a zero downtime. It's never gone down, never broken down, never had any sort of issues with Algorand technology. Whereas you can see, you send somebody a Bitcoin, it's been 15-20 minutes, it hasn't cleared yet, right? Or Ethereum has extremely high gas fees, right? Extremely high cost. If I send you Ethereum, it's going to cost you a lot of money in fees, right? And it's going to take some time. And then so with Algorand, it's 3.7. I think they even brought it down more. 3.3 seconds, something like that. If I send you, Algorand right now, 1, 2, 3, boom, it's yours. Confirm. Final transaction, right? Whereas with Bitcoin, Ethereum, you're waiting 15-20 minutes for that. So global financial systems cannot be powered with that time lag and those high amount of fees, because think about institutions that are doing billions of dollars. Imagine the fees that are going to be costing them. They're never going to use things like that, right? Whereas with Algorand, the fee is like 0.001 algo, which is like nothing pretty much. So those are the two reasons. Number three, there's no forking in that. People can't create duplicates of the same currency, whereas people can do that with Bitcoin and all these others. And then number two, actual real world use cases. Whereas other cryptocurrencies are focusing on NFTs, pictures of gorillas and stuff like that. There's companies like Travelex, where you can buy, they're doing airline tickets using Algorand. They're doing, I think they did, last I checked, $400,000 every single day they're doing in ticket volume, right? So that's actual use cases. You buy an airline ticket, it's on your phone, it's yours. It's in a form of NFT. So that's real world use case. If you go to Lofty AI, is a website where you can buy tokenized real estate. That's using Algorand technology. So when I look at what's actually being used to conduct business, it's been Algorand. Other cryptocurrencies are focusing on, hype or NFTs or this, that, the other, but they cannot be used because they're way too slow, way too clunky, not secure. They break down. Solana, Solana has an on-off button. How decentralized can it be when somebody can just turn it off? So I think those are the things where I feel really good about it. But again, we'll see. Time will tell.
Yeah, interesting that you mentioned tokenization, because it's definitely, is discussed quite a lot. How do you see the development in Web3? So as an angel investor, are you also investing in a Web3 startup? And are those just going to be on Algorand, or you are assessing them, regardless of the blockchain they are on?
So, I'm not too involved in the Web3 space apart from, my investment in Algorand. A lot of my angel investments are a variety of different sectors. There was a couple marijuana companies I invested in that went public. There were a couple good ones. I invested in a drone company that went public. Recently, I invested in a fintech company that just went public last week. So there's all different sectors. I have a few other going public in the next few months that are like a private jet company. So, those are all variety of different sectors. I purely go based on obviously my how I feel about the company, what I think about the company, entrepreneur and the team behind it. So I'm not too involved in the Web3 space. I think the only closest investment to Web3 would be an Algorand, the ecosystem. I participate regularly in there. So to stake your Algorand, you get paid. Like this quarter, we're going to get paid with 17-18% just to stake our algo for 3 months. So I think I'm just involved in that space. But overall, I like what's happening in the Algorand ecosystem with real world use cases. I think they were just quoted in the Bank of Italy's paper and European Union's paper. They're thinking about maybe using algo as a potential form of CBDC. We'll see how it plans out. But it's definitely ripe for it. Even SEC, Gary Gensler, right, who runs SEC, even he, at one point, there's a video clip of him saying a few years ago that the only technology that can actually power a system is Algorand, and they can run Uber on it, they can run all these things on it. So it's going to be interesting to see what happens in the next 5 years, where people like Uber, Lyft, they start incorporating these technologies.
100%, because they are all going to do it. And that brings to me the next question, which is about AI, which, has been really on any kind of headline for the last 6 months. Do you invest in AI project, and how do you see AI investment develops in the future? Because we have seen a big bubble now. How is going to settle this AI? Is going to be more like kind of like application led? Is going to be more like big tech company, coming out with AI product? I just would like to understand your views on it.
Yeah, I think right now there's obviously a lot of hype about AI, and that happens every year. We get the new shiny object. Once it's blockchain, every company says blockchain. Yeah, then the marijuana stock. Then they go. Every time we get a cycle, so we're just in an AI cycle where every company just in the earnings report will just say AI. We're doing AI, and the stock goes up, and that happened with blockchain as well. So I personally, I like Tesla. I think a lot of people aren't looking at Tesla as AI play. They look at Tesla as like a car company. But Tesla is the biggest AI company out there because they have full self-driving that other companies can't even come close, right? Mercedes full self-driving doesn't even let you change lanes. You got to stick in one lane. So Tesla is like way leaps and bounds ahead of all the competitor. And the biggest thing, they have all the data on all the roads. Where's the pothole? Where there's not a pothole, right? Where there's a turn, where there's a lack of turning. They have all that data that they could eventually monetize and sell to the government if they want to fix their roads for infrastructure, right? They know exactly where everything is. Number one. Number two, Tesla is now getting into insurance business, right? So they're selling their own insurance. So you can bypass Geico, Progressive, and get insurance directly from Tesla. So that's another thing they're getting into by using AI. Because I saw this on my friend's Tesla, and I was really impressed. If you go on the app, it assigns you a safety score. How safe of a driver are you? How often do you brake? How often do you turn very fast? They have all that data that other insurance companies don't even have, right? That's all the AI that they're going to use to, even if you're wearing a seatbelt or not, they can look at it because there's a camera in your Tesla. So I think that gives Tesla a lot of advantage in that with the AI department, and they're going to use all these learnings to steer the car the right way. If there's a bump on the road, they can cause it to go a little bit slower. That's the real AI that people aren't looking at right now. And then the big players, Google, Microsoft, they bought OpenAI, so they're always going to remain the big players. But I think Tesla is the hidden AI because people still talk about it as a car company. Once that discussion starts online on AI, you're going to see that movement.
Interesting. What's your take on gaming?
I'm not too big on it, on the gaming sector. I'm not too familiar with the gaming sector. The only thing I know is sometimes I get bored. Maybe I'll play something on my Xbox. But apart from that, when it comes to investments, not really into gaming investments.
Okay, now I want to throw something here and just pick your brain and see what you think about it. Psychedelic. There is kind of like some discussion around being an interesting area for investment in the next few years. What are your thoughts about it? I mean, you are an investor in marijuana, so it's not the same, but you know what I mean.
Yeah, I think it's too early. Like I think psychedelics definitely have a benefit. Like it's proven to have benefits for anxiety, depression, and just PTSD and all those things. So they definitely work, right? There's no doubt about that. But how it relates to being investment is a problem because look how much time it took for them to fully make marijuana legal. It's still not legal yet, right? And because it's still not federally legal, the marijuana sector is just constantly going down. So I think psychedelics, they're not going to legalize that first. First, they have to legalize marijuana before they get to psychedelics. So I think that's why it's going to be a good investment sometime in the future. I just don't think it's ready yet. The ETF I know is PSIL, which is a psychedelic ETF that tracks the pricing of psychedelic stocks. That's also just been rapidly going down. I think it's going to be a tough one because to make money on psychedelics, look how much you have to sell. And I don't know if there are that many users to create the sales that the companies would need.
That's a good point.
I'm not too sure about the sector just yet. But as a product, I agree with it. I think it has a lot of benefits. It's just not sure as an investment it's not ready yet.
Yeah, it might have to go a bit more mainstream just than being for elites. Anmol, I think that was a super interesting conversation, quite surprised of your take on different things, and I really enjoy it.
Yeah, me too. It was great chatting with you.
Thank you for coming on the show.
Thanks for having me.
Is there a place where anybody that would like to reach out, maybe ask you suggestion, we don't say advice obviously, or some opinions, where are you most active?
Yeah, the best place to find me would be Twitter or Instagram, and my username on both of those is Delta90, DELTA9NETY. Had that username a really long time ago, but then they verified it, now I can't change it, so were stuck with that username, that's the best place to find me. And if you're interested in trading, then livetraders.com.